Last Friday, inflation came at a renewed 40-year high at 8.6%. So no one under the age of 40 has experienced as much inflation as they are experiencing right now. Let's see how this record high inflation reading is affecting our stock markets. All through last week, we were looking at this consolidation pattern with the members at myfinanceteacher.org as a potential bull flag. And for the scenario that bull flag doesn't work out, we did have the partial stops for SPY and QQQ in case SPY and QQQs drop out of that consolidation zone. The only regret now is that I should have had full stops rather than partial stops. And the main reason for this significant drop in the stock markets all through Thursday and Friday is expectation of more hawkish Fed with this record high inflation reading. As you might see over here, around a week ago, the expectations of more than 50 basis points hike were only at about 1.8%, which gradually increased to 3.6% to 4.6%, and the recent expectation of a 75 basis point hike is 23.4%. Hence, clearly, with expectations of a more hawkish Fed, the general stock market is down significantly, but a 50 basis point hike is still much more likely at 76.4% right now. So what I think is likely to happen to the stock market is a significant drop down into the FOMC, giving us very likely another lower low versus the late May low. The Fed, as they say, jawboning hawkish expectations, but an eventual hike of 50 basis points rather than 75 basis points, which is still a more likely outcome right now with 76% chance, is likely to shoot the markets higher, potentially for another retest of that 50-day moving average, perhaps even higher. This scenario does align relatively well with the cycle's duration. The previous cycle was quite long, at 85 days long. And if the ongoing daily cycle in the general stock market finishes somewhere around that FOMC meeting lasting for perhaps 26, 27, 28 days, yes, it is quite shorter than usual, but in conjunction with the previous cycle that would maintain the ongoing average duration of these daily cycles at about a couple of months. This sort of scenario also aligns with what's happening to the US dollar. We see that the intermediate cycle on the US dollar is 150 days long. The dollar intermediate cycle duration ranges quite a lot. It can last for well over half a year, but even in that case, the ongoing cycle is getting quite old. So anytime over the next several weeks, I would expect DXY to drop down into an intermediate cycle low, meaning that a new low is going to be created below that late May low at about 101. And zooming into the daily cycle on the dollar is 14 days long. Usually these cycles last for just under a couple of months. And with the intermediate cycle being relatively old already, perhaps this daily cycle on the US dollar is going to top again around that FOMC meeting. So another couple of days of upward momentum on DXY before dropping down into the daily cycle low, a bit of a bounce into the next cycle and dropping down into the intermediate cycle low. Remember, nobody knows the future, but this is one of the likely scenarios. This also agrees with what's happening to the interest rates. This is 10-year rates, a relatively longer view over here. This is a weekly chart going back for over 20 years. If you zoom out a little bit, you will see that these 10-year rates are around the resistance zone right now, at a relatively significant resistance zone around 3.2. So again, it's not unlikely that we are going to see a bit of a correction, at least in the shorter term, and a bit of a relief rally in a range of assets. Next, let's have a look at some of the important market sentiment indicators, such as the optimism index. To be honest, it doesn't actually look well. We see lower highs on optimism index all the way since late 2021, but I still think there is a chance for this optimism index to poke above 50 for that short-term bear market rally. And judging by some of the other indicators, this bear market rally that is still likely to happen might actually be a relatively strong one before the general stock market continues much lower as a recession brought by expensive energy takes place. I've also discussed recession and energy prices in one of the recent videos. Links are down in the description. So while optimism index doesn't look extremely well, it might have already topped recently at 47 without poking above 50, although I still think there is a chance that the optimism index will poke above 50 with this rally. Some of the other indicators do look interesting. This, for example, is the smart money versus dumb money confidence. Smart money is blue line over here, and yes, it has decreased since late May, but it's still elevated at around 65. Again, as I mentioned in one of my recent videos on the stock market, I think there is still a chance for a bit of a rally in the stock markets to bring the smart money and dumb money confidence closer together, with the smart money below 0.6 and dumb money at above 0.5 into this midpoint box mentioned in one of the recent videos. And lastly, look at this very interesting insider buys versus sells. It's not an indicator that works 100% of the time. Over here in the pandemic low, for example, we did have the insider buys at relatively high levels, but so were the insider sells, giving relatively mixed signals, even though that actually turned out to be a very nice buying opportunity. The signal right now is not that mixed. We see insider buys at very high levels while insider sells are at very low levels. Assuming the insiders are the ones that are well informed of what's actually going on with their businesses, this strong buy divergence is actually a positive sign at the moment. But of course, nobody knows the future, and it's only my opinion, which I'm happy to share with you. So in return, let me know, what do you think? Do you think that the Fed is actually going to raise rates by 75 basis points? Is it likely in this environment of high inflation? Talking about inflation, tell us down in the comments, how are you coping with it? And do you think it's going to come back down anytime over the next few months? Have a nice day. Bye-bye.